Is a rotation into the recovery trade now underway? Let's bring in Simonetti, the Senior Vice President at Morgan Stanley Private Wealth Management, and George Cipollone, Portfolio Manager at Penn Mutual Asset Management. Guys, happy Friday. Katerina, how much of this, what we're seeing this week, is about reopening hopes? How much of it is just maybe selling out of some big gainers as major indices hit new highs?
John, thank you for having me on the show. I think it's a little bit of both. Market has been heavily supported. It is strong. The earnings season delivered some great surprises. And I think that we're definitely getting on board with the reopening philosophy and getting behind the cyclical names and getting behind the story of reopening and repositioning our portfolios to reflect what's going to come in that post-vaccine, post-COVID type of era, which is really exciting. But having said that, I think that consumers have developed some really powerful habits over the course of the last 9 months, and stay-at-home names should definitely not be discounted. There is a place for them in the portfolio, and we certainly are paying attention and owning them.
Yeah, it's not as if we're not going to spend any time at home when we eventually are cleared to really go out. George, I was just listening to Steve Leisman's excellent interview with New York Fed President John Williams, and something that struck me was just this idea of optimism justifying so many of the valuations that we're seeing in the market now. But it seems to me like the optimism has become the story driving the optimism. Is that dangerous at some point?
It absolutely could be. And so we're value investors, and so we look at valuations, and valuations are really important to us. And so if you think of the Fed's impact, they've had two major impacts here. They've kept interest rates low, which has driven up asset prices. And number two, they have stimulated a certain behavior in the market where people tend to be a little more irresponsible. And we've seen that through certain examples of specific stocks like GameStop, for example. Yeah. And so yes, to your point, we are seeing that, and that is behavior that is being led through Fed action. So that is something to be cautious about. And then if just going back to this reflation trade, I think it's important. We are income investors, so you are seeing a dramatic impact in the bond market today. And I think that's another thing that's very, very important to keep an eye on.
Shepard Smith here. Thanks for watching CNBC on YouTube.